Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by BetaShares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, BetaShares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with BetaShares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast. Phil, welcome back to the podcast.
Thanks for having me.
Always good to chat, mate.
Yeah.
Today we're talking personal insurances / life insurances. We're going to go 101 level.
Yeah.
Absolute basics.
Yeah.
Which is good. Because like you were saying, a lot of the podcasts, a lot of the content that people get online just really doesn't talk much about insurance and in particular personal insurance.
Yeah. Personal insurance is the least sexy topic, but it's very, very important. And so, yeah, I thought it'd be good to come on and just go, what is it? How does it work? What's the process involved?
Cool. Yeah. So if you have any form of financial responsibility, you got kids, you got a mortgage, you go to work, I think this is an episode that is really important for you to listen to. And if you haven't already got cover, to very strongly consider it. Let's start off with the absolute basics. I would call it life insurance. You call it personal insurance. What is it?
Yeah, so personal insurance is more than just life insurance. So That's why I call it personal insurance. So life insurance is that it covers your life if you pass away or you're terminally ill and you're unlikely to survive more than 12 months, then there's a lump sum payment. The next one is disability insurance. So if you can never return to work again, there's a lump sum payment that gets paid out. The third one is trauma insurance or critical illness, and that is for significant medical events. So things like heart attacks, cancers, strokes, there's 30 odd conditions that will be covered under, MS, Parkinson's, whole bunch of things. And that's a lump sum payment that gets paid out under a diagnosis. And then the last one is income protection. And so that is paying you a monthly income if you can't return to work because of an illness, injury, or sickness. It doesn't cover you if you are get made redundant. It doesn't cover you if you quit your job, you're not getting paid. It's only for medical reasons you can't go to work. Then you'll get paid a monthly income to replace a lot of your income. Then there's a fifth one that it's child's cover. So it covers for significant medical illnesses for children. And so, yeah, there's kind of four and a half types of cover.
Yeah, 4.5 types of cover. So we'll go into each one of them. How do most people get insurance? This is the highest level. We'll go through the process in a bit, but how do people normally get this type of insurance?
Yeah, so really 3 different ways to get these type of insurance. So the super fund. So most super funds will have insurance tied up with the super fund, and so they only go with one provider. So the super fund, like Australian Super, they've contracted their insurance to go with TAO, and so that's the provider. And you can go to Australian Super. If you're a member, you'll naturally have an automatic set amount of money covered. Normally, it's life insurance or death cover and disability. Sometimes you might have an income protection that's for a small amount of cover, and that's called default cover. So when you join the fund, they'll often give you that default amount as long as you qualify. And then you can go and increase it. So you can go to Australian Super or whatever super fund you're with and say, hey, can I get $1 million or $500,000, whatever the number is? And then you go through some health questions to get that. So that's one way. The second way is going direct to the insurance companies. Now, this is pretty limited. There's only really 2 that will offer direct. There are some ways you can go like through Medibank Private, but they're not the actual insurance company. They're just like a promoter of another insurance company. So most of the direct offerings are, through distribution through other companies.
Yeah.
But TAO, one of the biggest insurance companies in Australia, they do offer direct. Or you can go through a financial advisor. So an advisor has options to, recommend any product, any Australian insurer on the market, and they can help you through the whole process.
So you got super, which probably everyone listening to this would be aware is either in there or they might have it. You could go direct to an insurer, or you could go through a financial advisor. Now, you're a financial advisor, and this is what you do. Why did you choose to do insurance when you could have done all the other stuff? Like some people that are new to insurance would be like, there's financial advisors that just do insurance. Like, why is that?
Yeah, there's not many of us, to be fair. The reason why we did it, because I'm really passionate about helping kind of the everyday Australian. Financial advice is getting more and more costly. And so advisors, unfortunately, just because of the nature of the compliance burdens and all the work, we are getting priced out of the everyday Australian. I want to make sure we're helping everyday Australians make a really important decision on something that's significant in terms of financial impacts, in terms of if they need a claim on it, we want to make sure they're protected. But also the cost of insurance, over the lifetime is significant. So it's really important to make a really good informed decision. So that's why we've done insurance only, is because our cost to serve our clients is much lower on a fee basis, because we also get subsidised by the insurance company, so they pay us a commission. So, it doesn't matter if you're on $60,000 a year income or you're on $300,000 a year income. We can help everyone.
Yeah. So just to confirm there, you do pay a small fee up front with Skye, but then you get a commission, and that subsidises the cost of the advice that you give for the insurance. Right?
Exactly.
Yeah. Okay. Versus thousands of dollars for full, like, other types of advice.
Yeah. So if you're getting holistic advice, as you know, in your business, it is $4,000, $5,000, $6,000, $7,000.
Yeah. Very different. And a lot of the times people don't know this, but the financial advisors in those types of worlds don't actually provide insurance advice because it's so technical, right?
Yeah, they like it less and less. So it's very common these days for advice firms to go, they decide they want to be wealth advisors, and so help someone with their superannuation, with their tax strategies, investments. And when it comes to the personal insurance needs, they'll refer that out to a place like Skye. And so, often you're actually not going to the one place to do everything. There are still some who do it all under one house, but it's less common these days.
Okay, cool. That's good to know about how the industry works, and people listening to this or watching this can think, that's how I go and get it. Let's start at the top. Probably the most obvious one, although life insurance probably could be renamed as death insurance. What is that, and how would it help me?
Yeah, so life insurance is if you pass away, there's a lump sum paid out to your dependents, your family. If you're single, you don't have kids, don't have dependents, then life insurance or death covers may not be necessary. But as soon as you've got dependents, as soon as you've got financial responsibilities that someone else is relying on you and your income to fund, then it's really important that we have death cover. For sure.
So this is a lump sum that pays out. Yeah, and it goes maybe an interesting question for you, I don't think I've ever asked you on the show before, is say I carked it today and say it was all watertight, like the policy and everything was good. How long would it be from the time that I die to the time that my family received the money?
Very quick. Yeah, so we need a death certificate. So sometimes if there is complex death situations where we need a coroner's report, that can delay it.
Yep.
As soon as we've got a death certificate, fill in the forms, submit it to the insurance company, and it'll be paid really quickly.
Yeah, right. Okay. The next one is in the industry known as TPD.
Yeah.
What's that?
Total permanent disablement.
Yep.
So that is a lump sum payment if you can never return to work again. So there's kind of two different types of TPD policies. So one is, can you return to any job you're reasonably expected to return to based on your experience, based on your qualifications. And so you've got to not be able to return to any job.
Okay.
And so for myself, I worked in a bakery when I was a kid. Now, if I can still do that because I need to claim on my TPD because I can't be a financial advisor, then the insurance company can reasonably say, well, you can actually just stand in a bakery all day and deliver bread. The other option of TPD is own occupation TPD. So can you do your own occupation again at the time that you either applied for the cover or the time of claim is based on your own occupation. So if I can't run an advice firm for whatever reason, as a financial advisor, we're helping people with claims. So it can be emotionally taxing, can be quite difficult in terms of from a mental health point of view. So from a mental health point of view, if I can't work and be a financial advisor, and I can get paid out that TPD policy.
That makes sense. You're in a bakery.
I was when I was 15.
Yeah, right. We never know.
Yeah.
You might go back to it.
Yeah, that's
you might
right.
have you earning one day.
And just to touch on that TPD, we actually had a client claim on their TPD own occupation because they were a nurse and they had a motor vehicle accident. And so when the insurance company assesses the claim, they will always assess it first under any occupation.
Okay.
And because just I won't go too technical on it, but they'll always assess it first on that. If you don't qualify under any occupation, then they'll assess it on their own occupation TPD. And this client, the insurance company just, determined that she wouldn't be able to return as a nurse again, and so paid out on her own occupation TPD.
So they go, nurse insured for X hundreds of thousands of dollars, say, for example. They go, could she be, I don't know, an office worker? Could she be, a carer at home or whatever the case may be? Okay, yes, she could do something, but then they go, could she be specifically a nurse in her same job?
Yeah, that's right.
Yeah, okay.
And that's where they determined that, yes, she could do another occupation, but she can't be a nurse, so we'll pay that claim.
Okay, because her policy was own.
Yeah, exactly.
Okay. Is there like a preference that you have to one or the other? Or?
We like own occupation. That's kind of our first step.
Which makes sense. It seems like a better criteria.
Yeah, you're more likely to get paid out a claim under an own. Now that we've had this client paid out on her own occupation, I'm more believing in it, because this client would be in a significantly worse position had they maintained the any occupation definition, because the insurance company wouldn't have paid out. So we prefer own occupation. I think it is important. There are some times where it costs more. So some clients will determine, actually, for that extra cost, maybe it's not as important to me. And then, our job is to kind of empower our clients, make an educated decision on what they feel is best for them. And then, we'll adjust the quote and turn it off.
Fair enough. What about trauma cover? It sounds very similar.
Yeah, so trauma cover is based on a diagnosis. So it actually has nothing to do with whether you can return to work or not.
Okay.
So it's a diagnosis. So sometimes with these personal insurance covers, there is crossover. So you may have a cancer where you will trigger that trauma payment almost immediately. And these trauma payments, when we talk about speed of claim, trauma is the easiest, and it gets paid out so quick.
So I get a specialist report that says I've got some sort of cancer.
Yep.
The insurer goes, yep, that's the definite. That's like the
tick that box.
Tick box done.
Money
in
the bank account.
Yeah, right. Okay.
And because some insurance covers can be funded through super, so sometimes that can slow down a claim. Like for a life cover, they've got to make sure the super fund can pay it out to you. Trauma is always paid personally. So it's literally between the insurance company and you. They tick the box that it's a claimable event. They'll pay it out straight away. So it's very quick.
And then could you also then have a TPD?
Yeah, so for that example, if you have cancer where, yes, on diagnosis, you get paid out your trauma claim, and then it means that you actually can't work ever again in your own occupation because, you're experienced. Now, normally in that situation for something like cancer, it would be, maybe a month or years later, they would determine actually you can't return to work. Then you can get paid out your TPD as well.
Okay. So this is obviously for people, we're talking about insurance and finances and stuff right now on the show, but for everyone thinking, yeah, cool, insurance, great, good. But just imagine if you're in that situation where you do get a cancer diagnosis, you're like, well, I'm stopping work, right? I'm got to put all this time and effort into my medical care and prioritize my well-being. Everything else stops. And I've got this diagnosis and I need some money to pay the mortgage, to do this, to do that. And then who knows what's going to happen for me in 12 months, right?
Yeah.
So it's pretty significant.
And this is why it's important to have the mixture of policies, because, it is less likely to have a trauma event lead into a TPD event, but it's very common to have trauma and income protection pay at the same time.
Yeah, okay. Because then that would be the next one, which is income protection, where I do get that and I'm like, I can't work. So tell us a little bit about income protection.
Yeah, so income protection is your ability to work or not. So because of health events. Yep. So if you can't work because of a health event, you need to meet the waiting period, which we can talk about what that means.
Sure.
And then you get paid a monthly benefit, which is either the amount that you're paying for, so whatever your monthly benefit you're paying for, or 70% of your pre-disability income. So whatever is lower, the insurance company will fund. Okay. And so the waiting period is how long do you need to wait before the insurance company will start making payments. So there is like 30-day waiting periods, 60 days, 90 days, and it can be 2-year waiting period as well. So what that means is if you have that cancer, you will get paid your trauma payment straight away, and then you need to be stopping work for 30 days, and then the insurance company will start replacing your income.
How about for people that would say, well, I've got work cover?
Yeah.
What would you say?
Well, cancer is not caused because of work. Most events in Australia, most claimable events, are not caused because you've been in work. And so that's where personal insurance is super important, because anything that happens out of the workplace, any injury, illness, sickness that happens not caused by the workplace will be covered by personal insurance. So there are things like this. This client who had the TPD payment, because it was a motor vehicle accident, was actually getting paid by the TAC. And so there was a time where, she's getting paid by the TAC, and so her income protection wasn't going to fund the full amount. It was just funding the gap between what the TAC was paying and a pre-disability income. And so there is a combination of workplace injuries, compensations. Yeah. If you injure yourself at work, then yes, compensation schemes are there. They do have limitations. I don't know if you've ever gone through a workplace compensation scheme, but I've had family and friends go through it. It's a pretty painful process to get the money out, and it stops after a period of time. But things like these compensation schemes do change. So Victorian government and New South Wales government significantly limited the ability to claim on mental health from a workplace compensation scheme. So they've basically gone, we're paying too many claims for mental health, so we're going to rein it right back and make it very difficult to claim on a mental health condition due to the workplace.
But that could be something that's in one of these other things?
Yeah, your personal insurance cover will cover it as long as you don't have an exclusion on the policy.
Yeah.
If you can't work because of a mental health condition, anxiety, depression, stress, whatever the case may be, then they'll pay out. There's no proof that it happened at work or happened outside of work. It doesn't matter. Does a doctor sign off saying you can take time off work or you need to take time off work for your condition? If the answer is yes, then they'll pay out the claim.
Child's cover, this is the 0.5 of the 4.5 or the half type of insurance. We did talk a little bit about this last time you were on the show, because I didn't actually know that this was a thing. What is child's cover?
Yeah, so child's cover is like kind of a combined trauma and death policy for the children. So it's really just there to have money if your kids are significantly sick and have a really significant condition or they pass away. And so, the reason why I have it for my children is because if something really happened that we, cause us to take time off work, my income protection is not paying me because I'm not ill.
Yep.
Someone else is ill. So that's why we've got child's cover, and that's why we recommend it to our clients. It's relatively cost effective. We don't recommend big sums of cover. The other benefit of child's cover is that it can, once the children become adults, most of them can convert to adult policies. And so, they've got some of them turn into a life policy only, some of them life insurance and trauma policy for the kids.
When people come to you guys at Skye Wealth, can you give us a sense of how many parents would be taking this up? Like, I'm curious, like, there's a lot of people that are in their 30s that listen to the show, they've probably just got young kids or 20s or 40s or whatever, and they're thinking, well, this sounds like something I hadn't heard of. How many people that would come through the door actually get that type of cover?
Yeah, most people take it because, I said, it's a really minimal cost on top of the overall cost of insurance.
Okay.
And it's just a matter, again, our job isn't to determine whether clients take the cover or not. Our job and the way we see it is to educate people because you don't know what you don't know. As you said, I didn't know it was a thing. And so educate why we recommend it, why we think it's important, and then empower people to make a decision that they feel is right for them. So a lot of people do take it out. The only real pushback I've ever had, and I actually had a conversation with one of our team last week about, the pushback, was I heard from clients was, I don't want to be profiting off my child's, illness. And my response is, well, if you've got partners, you're technically profiting off them passing away, and we don't think about that as a negative thing because it's important to have that.
Yeah.
And the way I think about it for my own cover, because I've got heaps of cover myself, is if my kids were ill, do I want money in the bank to allow us breathing space and time and capacity? Yes. So I've got to pay for that in terms of a premium. So at the end of the day, we don't really mind if clients take it or don't take it. We just want to educate them on what it is, how it works, and then they make a decision.
Well, the cost of childhood traumas and medical events is significant. Doesn't matter how old you are, you still incur medical costs, right? And so having all of those things, at least not all of it, but at least maybe even some of it covered would be huge for families.
Yeah.
Because you can have health cover and all that sort of stuff that covers hospital visits or like surgeries and that sort of stuff, some of the time. But there's, having that other just safety net behind you makes a lot of sense. What's the difference between going through a financial advisor like yourselves or just going direct? Because let's be honest, a lot of the Rask community are a bit more like do it yourself, roll up your sleevers like myself, kind of like, what's the cheaper, good option? But something you've impressed upon me is the importance of the right advice. Why would someone go through a financial advisor for this specifically? Yeah,
so when it comes to, let's call it out. Of course, I'm biased in terms of why I think people should go to a financial advisor, because that's what we do all day, every day. But the three options I talk about, super, direct, and advisor. The direct versus advisor is a no-brainer in my mind. The reason being is because there's really only two real insurance companies who will offer direct. All the other insurance companies offer via a financial advisor. So it's something like, a Snickers bar. I don't know, who makes Snickers? Mars company?
Let's say that, yeah.
Yeah. So if I want to go and get a Snickers bar, do I call up Mars company and say, can you deliver me a Snickers bar? Or do I go to Coles and get it?
Yeah.
Snickers have decided that it's cheaper, easier, better to distribute through Coles. And so that's how I get my Snickers bars. And that's what most insurance companies have decided to do. It's cheaper, easier, better to go through financial advisors and pay them a commission to offer our products. So going direct, you just don't get the market. And so if one insurer says no, because you've gone direct, you've literally got one more insurance company to try. And if they say no as well, then you're done.
Yeah.
Okay. Advisor has access to all insurance companies, and so that we do have actually a lot more choice than the consumer going direct. That's why going through an advisor does make a lot of sense. The one insurance company, well, there's two that go direct. One of them charges the same premiums as if you're going through a financial advisor, and they pay us a commission. So it's like if you're going direct to TAO or you're going through a financial advisor and they're going to recommend TAO, it's the exact same premiums. You're not benefiting from going direct.
And you get the advice.
Yeah, you get the advice, you get the support, you get there is something and there are a lot of intangibles, and I can go on a high horse about this, about working with an advisor. But as an advice firm, I know we have influence with the insurance company to make decisions that is in our client's best interests, that they otherwise may not do it if you're going to them directly because you're one policyholder. And if you're asking for a claim as one policyholder and they say no, your recourse is to go to AFCA and to go through the whole court systems potentially. But as an advisor, if I've got $3 million worth of premiums with TAO and they decline a claim and I think it should be paid, then we will argue pretty strongly that, hey, we may not recommend future clients come to you if you don't pay out a claim that we think is legitimate.
Yeah.
Now, we never strong-arm insurers. Like, we've never once argued that anyone should do an illegitimate claim if someone's doesn't deserve it. We'll stand by the insurer's decision that they shouldn't pay it. But there is that kind of weight of influence when it comes to working with an advisor and an advice firm when it comes to those things.
Yeah, for sure. That's a really good point. And what about, this is the piece that you've educated me on over the years, is what about if I just go to Australian Super? Like, why wouldn't I just be like, okay, Australian Super?
Yeah, so there's two major reasons. Number one is choice again. You've only got one insurance provider with Australian Super, which is TAO. I mentioned TAO a lot. They're good in lots of ways and not so good in lots of ways.
Yep.
So Australian Super only has TAO. So if you go through TAO and increase, or so through Australian Super and increase your cover, and they put an exclusion on the policy, well, you get what you get and you don't get upset.
Yeah.
It is what it is. You don't get a choice. With a financial advisor, we can get it so you can pay. So Australian Super Bank, or the super fund that you've got, can still fund the premiums of whatever insurance policy we set up. So whether TAO's the best or MetLife's the best or AIA is the best, doesn't matter which insurer we recommend, we can still get your Australian Super Fund to fund the premiums. So you get the upside of my super fund can still pay for it, but we have choice. So if TAO is going to place an exclusion on your policy, well, maybe AIA wasn't going to, and then we could recommend AIA or, one of the 10 other insurance companies. So what we do is we do that assessment up front and go, who's going to give us the best terms of this client, this potential client?
Yep.
And then they all come back to us and compete on terms and say, hey, we'll do an exclusion, we'll do a loading, we'll do whatever. And then we then look at the pricing, and then we go, okay, this is the insurance provider we want to go to. And guess what? You can still get Australia Super to pay the premiums.
Yeah. Which is powerful.
Because you can also move from Australian Super to Host Plus in the future, and you maintain your insurance policy. But if you've gone direct, you've got to cancel that insurance policy and set up a whole new one. Which
is a scary thing. That's why I always say to people on the show is like, don't just go and change super funds without thinking about your insurance. But if you have the flexibility of like, I can hunt for the best super fund, but also keep my insurance. Best of both worlds.
Now that was the one benefit of going through an advisor, not through super fund. The second one is actually the idea that super funds are cheaper is just not the case for our clients. I think I may have touched on it last time I was here. Like we quoted 500 clients, and I'm actually going to keep doing it every year. And Australian Super was 38% more expensive if people went and increased their cover with Australian Super versus going through a financial advisor or the policies that we would have recommended for the same level of cover. Actually, worse features with Australian Super, and it was more expensive. And group policies are actually less profitable for insurance companies, and so if it's less profitable and more expensive, then it's not a good scenario. So as much as, I was talking about it before, insurance companies, just like Mars, distribute through Coles because it's more profitable for them to do it. It's the same when it comes to insurance. It's so much more profitable for insurance companies to distribute through financial advisors.
You're going to make me want to get a Snickers. And then the health insurer will be like, wait a second. Okay, so we talked about like what are the 4.5 different types of cover? What is the cover generally speaking? Waiting periods. We didn't actually talk about cover periods for income protection, like the length of time that you can get covered for by income protection. What is that?
Yeah, so you can do 2 years, so which means that, that's the benefit period. So if you go on claim, how long will you get paid for? So most super funds will default at 2 years, so it stops after 2 years. You can do 2 years, you can do 5 years, or till age 65 is the common one.
Okay. What have you got?
I've got till age 65. Yeah. So
more expensive, but
the majority of claims that the insurance companies are paying out are for those post 2 years. So it's much less likely that you will be on claim for that long, but if you ever need it, you cost the insurance companies 80% of their income protection payments.
Okay, interesting. Okay, so we've talked broadly about the application process to get insurance. Maybe just you should comment on, I think, like what's involved in getting personal insurance is sorted. Yeah. So like what's the practical process? I'm listening to this. I'm like, well, I've heard the guys talk about this for years now. I've never done it.
Yeah.
How do I actually, what are the steps involved?
Yeah. And so, obviously I think going through an advisor is best, but I'm not going to just talk about that as the only option. So if you go to your super fund, you can just log on and, generally go through the apps and ask to increase the cover. You'll have to fill in a health question, a health declaration. It's super important you fill that in accurately, read the questions accurately, and then that will go to an underwriter to make an assessment whether they'll offer you that cover or not and under what terms. So that's through the super fund. Direct is the same thing. You go on a website, you get a quote. Once you're happy with that quote, you then apply for the cover and do the health questions.
Okay.
Now, the thing with advisors is we take a step back and we ask you the health questions first. So what Skye, this is what we do. Ask you the health questions first because we've got choice of insurance providers. We want to work out which insurance provider we're going to recommend first based on your health history. So we ask a million questions about your health history, about your financial situation, and then we go to the insurance company and say, hey, how would you assess this if it was an application? Yeah. And then we make a decision on which ones we like and which ones we don't like. And then we do a quote comparison in our research and then, have a pricing overlay. If we're going to have two insurers offer the same type of cover, one's twice the cost of the other one, well, we'll recommend the cheaper one, all things being equal. And then, so as a business, we ask those questions up front and then we do our research and then we provide a statement of advice And in that statement of advice, it's really the three key things that we touch on. So what's the level of cover we recommend you? Based on your individual financial situation, we recommend X amount of life insurance, disability, trauma, income protection, child's cover. And, we go through with our clients as to how we got to those numbers. So the level of cover is important. Next thing is, what are the expected outcomes? So before you're applying for cover, we want to let you know that you're going to get an exclusion, or that you're going to get a loading, premium loading, or you may get declined for some covers. Instead of right at the end, you then get heard, you hear from the insurance company that you're going to get an exclusion. We try and tell you that up front as best as we can. And then the last thing is cost. What are the premiums based on what we recommend? And then if that's not enough cover and you want more cover, okay, we'll show you the quotas if we increase the cover. If it's too expensive, then our advisors will work with you to bring down the cost and what are the pros and cons of each of the decisions. And then we go ahead with that application. Okay. Once someone's comfortable with the quote and they're happy with whatever they've decided, that's when we go through that process with the insurance company and help with the application. And then they've got to go through the health questions again, and they've got to, go through the underwriting.
Yeah. Okay. So how do you think about it from the time that I would want to get cover to the time on average that I would then have cover? Like, how long does that process on average take?
Yeah, so it's a good question. So for our business to get the advice, to do the research and then get the advice document, it's taking us, once we've got all the information from the clients and the insurance companies, it takes us 15 days at the moment. It used to be really long.
Really?
We've worked super hard in making it as quick as possible.
Wow, that's really quick.
Sometimes some clients take a long time to give us some information, but sometimes people are really quick and get us everything. So there is initial research, which at the moment is less than 30 days to make sure we've got everything on average. But then the insurance application, again, it depends on the insurer, depends on the complexity. So if you've got a health condition where the insurance company needs to get a medical report, that can depend on the doctor. Some doctors want you to come in and book an appointment, and they kind of double dip on payments, but I won't go too deep into that. And so that can delay the process. But our average time frame at the moment is 50 days from we've submitted an application to it being finalised, completed.
Okay, cool. Good to know. There's probably only one final thing which I wanted to ask you about, which is when it comes to making a claim, what's typically the process and how does a financial advisor support, or if at all?
Yeah. So, again, I'll talk broadly across the business. So if you've gone direct, you've got to work with the insurance company directly. You're not going to go and get assistance. Yeah, there's no one else in between, unless you go to a claims advocate and you're paying them a fee for that. Yep. The next is the super fund. So you go and make the initial claim with the super fund, and then the super fund will then process a little bit of it and then pass it on to the insurance company. So again, you're going direct with the super fund or the insurance company. But when you've set up through an advisor and our business, I'll just talk about our business, we've got a claims team who that's their role, is helping and supporting our clients through claims.
Okay.
And so, as I said, with this client who had an own occupation TBD, we help them through that whole claims process. And actually, to be honest, this is, again, these intangible values of advice. I'm a massive advocate of advice, whether it's through Skye or anyone else. The reason being is this client who got paid $1.6 million for their for their TPD policy, they called us up to cancel their policy.
Oh, wow.
And we have a process in our business. We don't let clients cancel. They can go directly to the insurance company and cancel if they want to. We want to have a phone call with our clients before they cancel. And again, there's always this, we don't want it to be seen like we're creating roadblocks for our clients. At the end of the day, they're adults. They can cancel their insurance policy whenever they want. We just want to make sure they're fully informed about the risk that they're taking on and understanding why they've chosen to do this. This client called us up to cancel the policy. And then we ask questions, why are you cancelling the policy? Because I haven't worked for a few years. Okay, why haven't you worked for a few years? I was in a motor vehicle accident. And we're just like, okay, well, that's actually a claimable of we can potentially make a claim. And so then we went through the process, and the client, instead of cancelling their policy, which is what they were going to do, because TAC told them they can't claim on the personal insurance and TAC, which is incorrect, they're walking away with $1.6 million
wow.
in their bank account, tax free. And so
wow.
So this is why.
What a phone call that would have been.
Yeah, it was like. It also again, it just, you know, we sometimes get these negative comments. Oh, it's hard to cancel with you guys. Well, yes, we want to have a phone call, and I understand the optics. It's because you may feel like we're trying to convince you or persuade you to keep your policy. We don't care. One individual policyholder makes such a small impact on my business and our revenue. Yeah. Couldn't care less if any of our clients cancel their policies. But we want to make sure they're informed and they're doing the right thing, because we have this situation where someone would have cancelled it. The insurance company wouldn't have asked questions about it being a potential claim. The client may never have thought about it ever again in their life, but now they've got $1.6 million.
Wow. I did not know that. What a turnaround.
Yeah.
Talking about the most valuable phone call of your life.
And again, and this is the value of advice, whether it is Skye or any other advice firm. This is, you know, you see it now in your advice business, the value that advisors play in just going, you don't know what you don't know. How often are you going to go through a trauma claim or an income protection claim? Hopefully never, really, is the answer. But if you do need to, do you want that support from an advisor who set up a policy that's likely to be cheaper than the super fund direct anyway? Anyway, I'm going to keep ranting if you let me, so I'll stop getting on my high horse about advice.
If you want to work with Skye and Phil's team, the easiest way to do it is to head into your podcast player or YouTube description, and there's a link there, and you'll be able to connect with the Skye team. We've been partners with Skye for quite a while now, and it's been really awesome. So thanks for everything that you do for the community, Phil, and to the team. And if you're listening, you've got responsibilities, you're thinking your partner, your kids, you know, your mortgage. What was the line? If you got to go to work.
Yeah, if you have to go to work for financial reasons, then you need insurance.
Yeah. Okay. Good way to leave it. Phil, absolute pleasure.
Awesome. Thanks, mate.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.